Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day. Before we dive in, a standard disclaimer: nothing here is investment advice. Do your own due diligence. And today's episode is brought to you by ARC Silver Gold Osmium. They offer personal service and often the lowest price, period, with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the great things people had to say about ARC SGO and owner Ian Everard on this channel. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy PMs, I recommend Ian at ARC. He is a straight shooter. I purchased a lot of silver from ARC. So visit their website at arcsgo.com. Contact Ian Everard at 307-264-9441 or by email at ian@arcsgo.com for all of your precious metals needs, and make sure to tell him that Commodity Culture sent you. And today's guest is a sales representative at Sprott Money with over 32 years of experience in the financial sector. Over that time, he's developed a wealth of knowledge on hard assets, especially precious metals. We're going to be talking about gold and silver, the state of the economy, fiat currency, and so much more. It's Andrew Sleigh. Welcome to the show.
Thank you very much, Jesse, for having me.
Yes, it's an honor to have you on. And I wanted to start with a little bit of your background because we were talking before we hit record today, and you mentioned that you used to be a traditional financial planner for a number of years, and you left that whole industry behind when you discovered gold and silver and basically woke up to the concept of sound money. So could you walk us through your journey there?
Sure. So I was a financial planner for 32 years. I guess it's probably been a couple of years longer than that now. And about 25 years ago, I started my own practice and did the traditional mutual funds and health plans and pension plans and all that kind of jazz with companies. And in 2016, markets never corrected again, and things got worse in the economy, but there was never a change. It just kept going up in the markets. So I started to question all that and dove in on a journey to try and uncover some facts and truths about that. And that was January of 2016. And I was searching on YouTube all over the place for individual smart people that didn't have any strings attached to their comments. Like you don't ask a real estate agent when's the best time to buy real estate. Someone who's a fund manager, they just say, yeah, it's always a good time to invest. And if they say anything different, then they're fired. So I was looking for guys that did their own thing, and didn't have any skin in the game so they could be objective as possible. And so that took a little while to sort of filter out all that. And then for 6 months, I literally listened to about 1,000 hours of information. And in July of 2016, I was standing in my living room and I stood up and I said, well, that's it. This is the truth. And the stuff that's in my head is the lie. And there was all kinds of examples and backup of all the things I was hearing, versus the other side of the argument being on the fiat side is that, well, that's just crazy talk. That's just denial. And denial is not proof of anything. So if they can't have an argument to back up the fiat argument, then what I was listening to was really the truth. And so from there, I said, wow, I'm self-employed and I don't have a future in my job. I'm selling something that has a future value of nothing. And so then I decided, I tested the theory out with my two brothers are smart cookies in their own realm. So I explained it all to them and they said, yeah, we agree. And then I spoke to another gentleman I know, who's a financial planner that I hadn't seen for 21 years. And when I realized that gold and silver is where it's going to end up, I Googled it in my town where I live, and there's a shop 8 minutes from where I live. And I went to their website, and it was someone I knew owned the shop. And it was someone I know 21 years ago who was a financial planner with his own practice. And I called him up and I said, Dan, can I come over and see you? He's like, sure. So I went over there and I said, Dan, this is what I see going on. Am I going nuts or what? He says, no, it's exactly what I saw going on years ago. And I sold my practice and got out and opened up a bullion shop. And then the rest from there is kind of history, in that I started depopulating. First, I sold and got out of the Fiat system any of my own investments, because I like to lead by example. I don't suggest anything I wouldn't do for myself. And so I sold my own investments and bought metals and wanted to see how that resonated, because this was a big change for me. And then that felt right. So then, family members as well. And then I basically depopulated my investment book, to my friend's bullion shop. And he allowed me to, do the orders and do the deliveries to the client so I get hands on, because he knows I was, basically cutting my risks financially. And he was benefiting, but he really couldn't pay me anything for it. So I basically paid for an education on handling metal and restructuring people's assets. And then years later, basically just kept on pouring myself into education, history of currency, money, cycles of countries, you name it. And I spent another 5 years and probably 10,000 hours, literally, watching all these different people, extracting as much information as I could so that I could actually get it into my head. And now I talk about it. And now I, go on interviews and whatever. And then a few years ago, Sprott Money hired me to do this. And I was only supposed to be on temporarily. I just did it as a favor to the sales manager kind of thing. And then once I got used to working corporately again, because I hadn't worked for anybody for 25 years, I realized that from this seat, Sprott Money gave me the position where I could speak to people all over North America. And I didn't have that kind of exposure in my own little practice. And I can do the most good here, helping people all over the place, with my background being, I know the financial side and I know the metal side. And I've helped, tremendous amounts of people restructure their assets to save them for what's coming. So that's my story. And then 3 years later, I'm still here at Sprott and going strong.
Great. Well, I want to pull on that thread regarding taking one's assets out of the fiat system, because something we also discussed before hitting record is you think when it comes to the equity markets, you actually don't want to have a lot of exposure at this point in time. And when it comes to the traditional point of view regarding precious metals, a lot of people say, yeah, maybe a 5% allocation. That's actually very high in today's day and age when it comes to most financial planners. The general allocation is actually zero. But people say, it should, the people who do advocate for it say you should have 5% gold exposure, maybe a little bit of silver. Are you of a different mindset that people should have far more of their assets outside the traditional financial system, both maybe outside the banking system as well as traditional equities?
Yeah, 100%. So that 5 or 10% number has been the traditional number for many, many decades that people should hold in metal as just a default. But there's been a war against, the common people to discourage people from having metal. It's all about being in metal or being in equities, being in, whatever, stocks, bonds, mutual funds, because the governments and the elites control the dollar, and they control it by printing it into nothing, right? So they want us to stay in those systems, and they don't want us in the metal because they can't print gold and silver. Now, if you turn back the clock 40 years, it would have been, a good opportunity to be in equities and be in various types of stocks to have that stock market growth, and maybe it's a 5 or 10% portfolio of gold and silver. But what we're entering into now is the actual end cycle of a currency. So all bets are off on, the traditional portfolios are going to be a disaster. In my lifetime of 34 years now, I guess, in financial planning, where everyone's been brainwashed with a 60-40 split of bonds to equities. That has worked for the last 30 years, and now it's going to be an utter disaster when the system breaks, because bonds are going to go through the roof, and it's going to destroy immense amounts of wealth. And equities are going to have real problems and destroy wealth. And what are people standing there? Their jaws are going to hit the ground going, well, I thought bonds were a safe haven. Well, they had been for 30 years because the long-term trend was going down in rates. That's when bonds go up in value. And then when bonds hit a bottom and reverse course and go up, it actually has the reverse effect, that it's going to destroy value. And nobody has, because everyone's been doing this for so long, nobody has thought that bonds are now a dangerous place to be. Like it hasn't sunk into the environment yet. And it took me a couple of years to wrap my head around that, because I kept hearing experts talking about, the financial collapse in the stock market is going to be nothing compared to what's going to happen in the bond market. And I kept hearing it. I'm like, I don't understand why. And then slowly I started to realize a working theory that, if a bond is 2% and it goes down to 1, you make 50% return on your money, or maybe it's 100, whatever the number is. Anyway, so now if you're at 1% and it goes to 2, you could be down 50% or greater in your value that you put in. So if you put in, let's just say 100 grand, and it goes from 1 to 2, and you want to sell, how's the fund manager going to sell your bond when it's a 1% bond when the open market is at 2%? Like, nobody wants to buy it. And he or she has a written order that says, I have to cash this bond out. So the fund manager has an obligation to make you whole one way or the other. So they have to put it out in the market and start discounting the bond until somebody's willing to buy it. And that discount is your amount that's going to go down. So they may have to go to 50 grand before someone's willing to pick it up at 1%. And that's how the bonds are going to destroy everyone's wealth. So the greater the disparity of the interest rates, if you buy one that's 2%, now, next week it's 4% or 8%, the greater the haircut's going to be on your assets. And so there will be a possible short-term drop in rates, like we saw Bank of Canada do a minuscule 25 basis points. And they did that, even though they said the economy is somewhat strong. If it was, I guess they implied it was weak. So if it was somewhat weak, but you still lowered rates, I mean, they don't even know what they're doing. So you have that kind of long-term trend of a bond market going up, and that could be up for the next 30 years. There's no future there in bonds. And everyone doing that 60-40 split, it's going to be a disaster for the average person. So you're going to have the safe haven is you have to be out of bonds and out of stocks. Not to say there's day traders that can make money that are in and out, that are following it all day long. I'm not speaking to those kinds of people at all. But your average Joe Blow person that puts it in with an advisor and they don't pay attention to anything, the whole thing's going to hit the fan and go down, and they're going to be making phone calls to their brokers, and the brokers are going to have 1,000 phone calls ahead of them, and this whole thing is going to be very ugly.
And so how does somebody seeking alpha, somebody looking to profit, if the option is essentially, I don't know if you're advocating strictly owning bullion, or how exactly you view it. So maybe you could break that down for us. And somebody seeking a higher rate of return on their capital, if you're saying they should be out of equities, what's the best way for them to do that?
Well, let's bite on the metal side first. So basically, I'm suggesting to people that you need to have physical metal. Anything else is a paper trade, and the problem with that is that the exit is back to paper, meaning you have an ETF. And so if the system is still intact and you're trying to sell out, you're selling back to Canadian dollars or US dollars or wherever you are in the world. And so that's the problem, is you're back to your currency. And then how do you buy metal from there if there may not be any available? So you've got a metal play, but you don't really have a metal play. And then if there's a banking constriction, which I'm sure we'll come into that conversation at some point, you cash out 100 grand, that's in an ETF physical trust of metal, and 100 grand goes into the bank, but now you can't take it out. So what do you got? Zero. You don't have, you have 100 grand that you don't have access to. So those are metal trades on paper that have been utilized the last couple of decades. But I think going forward from here, they're highly dangerous. Like you can get in, but what's the road look like getting out? Because if this system all falls apart in the next few months or 6 months or whatever the timeline is, most people are going to get caught on that. And then once they're caught, like you're done. Like you can't change. Once it starts, you can't change your position. And we've had scenarios happen where when the markets start to crash, metals sell out very quickly. Like in the '08 crash, I didn't actually know this until this year, but in 2008, the precious metals, physical precious metals in the United States and around the world sold out in like a week or two. The U.S. Mint was backlogged in orders for 15 or 16 weeks. So if you're one of the people that were in the paper trades and were able to get out, and now there's nothing to buy. And when this next cycle hits, which is going to be far worse than '08, '08, there was not nearly as much debt. Everybody wasn't impoverished like they are now. When this next phase starts, people are going to be running to metal like crazy, and it'll literally just be days or a week or two. And then it's like, that's it. That's all there is to buy. And we have to wait for more to be made. So that's the danger, that everyone thinks that it's just available all the time. And it just isn't. It is right now. Anytime you want to call me, we've got it. Canada particularly has been very, very slow in sales. And, Canada is like asleep. Everywhere else in the world, it's being bought at highest volumes in record for the last few years. Canada, it's been terrible for 9 months. Everyone is full of product. But that can change in 2 weeks. Like a billionaire wakes up tomorrow and realizes they should be in metal, they can buy out the entire market in Canada. And then Jesse calls me tomorrow, and I'm like, Jesse, we're sold out. There is none to buy in Canada. We have to wait weeks before we get resupplied. And we've seen something like that happen during the trucker convoy. When the banks froze accounts, we had calls from all over Canada that were moving money like crazy out of the banking system. And that was ground zero. The banks forced Trudeau government to rescind the Emergencies Act. They called them and said, if you don't rescind this, we're going down. And I was like, I in the January before, that was a February, whatever date it was, February 20 something. The January before that, I sold about $2.2 million in a month. Okay. These are real life examples that people just don't understand on the street, that what goes on. And that's pretty good month sales. That's almost $1 million above what our normal budget would be for anybody. And so that afternoon, it was a Thursday afternoon. I'll never forget it. Those dum-dums went to the podium and talked about seizing accounts and anything suspicious. The banks are free to clear to do whatever they want. And that afternoon, I did $2.5 million. $2.5 million in an afternoon. And for the next 6 business days, Monday was a holiday. Tuesday, I worked 15 hours straight, writing deals all the way till midnight my time for people out west in Canada. I did $7 million in a day on Tuesday, and roughly between the 6 days, that Thursday and the following Friday, somewhere around 16, 17 million in sales, which is like 8 months worth of sales. And I'm just one person. And, that was going on all across the country, and everybody was selling out. I know there was dealerships that were sold out for 8 weeks. They had nothing. So that's all it takes. And then, Jesse calls in a week, wants to run in the metal, and there's nothing. I'm sorry. And you call around everywhere and nobody has anything, and you don't know when it's going to be back in stock. And you're in the queue with 100,000 other Canadians trying to buy metal. It'll be almost impossible. So that's the basis of why I warn people, is that when this stuff starts to happen, if you're not already prepared, you won't get prepared. It's not going to be an option for people. So I always tell people, if they're just getting started, that the best thing you could possibly do for yourself is pretend this whole thing is going to fall apart in 2 weeks, and restructure all of your assets as to whatever you don't want to lose accordingly, and get as much done as you can in 2 weeks. It doesn't mean you have to have it all done, but if you got 75% of it done, then you at least made a goal and you got a bunch of it done. And then you finish up after that. And if the whole thing falls apart 2 months later, you're okay. Or maybe it's 6 months later or a year. But if you aren't done, because it's still 6 months away, and then 6 months goes by and it's still 6 months away, and you keep on putting it off, it's going to make a disaster for people that keep treating it that way. Because in my personal belief, you want to be in a position where when this thing shuts down, that you don't have to get off the couch and react.
Right. And obviously these things are very difficult to time. So the other half of that question, the people who are saying, well, I want to be in the equity market because I want to be making profits, I want return on capital. Do you advocate maybe keeping a small percentage of your portfolio in the market and not being all in, so to speak? What would you say to someone who has that sort of goal in mind?
I have people that get on the phone and they talk about that, and I'll give them some education as to what I've done and background and whatnot. And I said, you're free to do whatever you like. I'm here just to try and give you information and help you. None of us here at this company, like I don't know, I can't speak for all the companies, but we're all salary here at this company. So I'm not here to drive sales because I'm going to make more income. I'm here to help people get out of the system. That's been my calling. So what I tell people is, whatever you don't want to lose, you have to get off the grid. And anything that you feel is going to be, you're trying to do higher returns. Well, remember this, the actual deflation of our dollar is probably closer to 10% of purchasing power per year. So if you're going to stay in the equity market, you're going to make more than 10%, and you're staying even, if not just above. So then you got to start taking the risk on, to try and get 20, 30, 40% return. And, a lot of people, particularly those that contact us, a lot of those people are playing in the mining stocks, which have very explosive return capability. But I also tell them, I said, if you're, some of them are calling and they're concerned because mining stocks have been, flat for quite a while, and they're getting, concerned and anxious, whatever. And I said, well, if you're 80% overweight on that stuff, which many of them will shake their head, yes. I said, you've got yourself way, way, way overexposed, because if that goes south, you're financially destroyed. You should never put yourself in that position. I said, you can follow the big guns that are doing, mining, talks and investing, but you got to remember, those are the big guns that have billions of dollars that are putting millions into wherever, and they have write-offs that are millions when companies fail, and that's just part of doing business. But you can't do that to the average person. So I said, if you've got 500 grand exposed trying to win the million, you're going to have financial disaster. If you do very well with a couple stocks, you can do that with 50 grand. If you get a 100 bagger, 10 bagger, whatever, that multiplies that much, 50 grand will become 500 grand for you. How greedy do you want to be? With that risk. I mean, 50 grand is only 10% of 500, and that stings, but it doesn't financially cripple you, and you can't do that anymore. So you do that 5 or 10% stuff that you can live with. And if you're not paying attention to it, like daily type of thing, in my humble opinion, most people shouldn't be in the market like that, because they buy it, forget about it. And if it's 5 or 10%, so be it. That's not going to hurt them, but they also could be missing out on returns as well. On day traders, that's a whole different animal. I believe day traders, they're there in front of their computer all day long. They can go at it. But I do advocate for people to be reversing their positions on that, to have, at the end of the day, gold and silver are real money physically in your possession and or in storage that's secure. And it's very difficult for that wealth to be taken from you. They can't print gold and silver into nothing. So, interesting stat came out of the US and Canada not too long ago. Somebody did some stats for the year 2000 to 2017, I believe it was. The US dollar lost 84% of its purchasing power. So they said, if you are invested, in something, and whatever your dollar amount is in the year 2017, you have to subtract 84% against it to get your real rate of return. So, when you start doing that, there aren't too many gains out there. Like if you had 100 grand and then you went into the market, and 2001, there was the dot-com bubble, then there was 2008 and March 2020 or whatever, when we had a 38%. So even with those big corrections, if we're generous and say your 100 grand goes to 300 grand, and in 2017, you subtract 84%, you're below 100 grand. You didn't make any money. And there's a lot more precedent for that. In 2008, the Venezuelan stock market, is on record of being like the number one performing stock market on record by a long shot, nothing even close. It did something like 10 million% return, some huge number. I can't quote it to you. And if you invested $1,000, let's just say January 1, a year later you had 10 million, but the 10 million bought you less than the 1,000 it did a year earlier. So you didn't make any money. So it's, and then the Canadian government put out a white paper from the Bank of Canada in 2006, and they stated that the Canadian dollar lost 94% of its purchasing power. So that means the Canadian dollar was worth 6 cents in 2006, and now it's worth around 2 to 2.5. So what did you make if you're in fiat dollars?
Yeah, those are all great points.
It's a bit of an illusion, in my opinion.
I want to hear you break down what you see actually occurring when it comes to this collapse up ahead of fiat currency. Give us some details on what you're seeing in the banking sector, what you're seeing with government debt, how you think this all ends, and what is the aftermath of that? Is it an eventual return to a gold-backed currency? Will people wake up to the financial engineering that's going on behind the scenes? Because so many people are clueless at this point in time. So what do you see occurring, and how do you see it all playing out?
Well, when I was studying history of currency, so I could understand what was going on now, I found out that, currency is only 1,000 years old. And once you go off a gold standard, every currency in the world has returned to its intrinsic value of zero, without exceptions. And its average lifespan is 35 years. So we went off a gold standard, let's say based on the US dollar, because everyone was pegged to that in 1971. Nixon finally took the last of the gold backing away from the US dollar. And it was supposed to be temporary, I might add. You can see his video everywhere on YouTube. And so the world's now off the gold standard all at once, which has never occurred before in history. So studying some of this stuff, it's like, okay, every currency's failed once you take it off a gold standard. We haven't been on one for 50 whatever years. In the last number of years, the foot seems to be to the floor on the gas pedal for printing money and creating debt beyond measure, because we're in that zone now where the governments all realize they can't pay back this debt. And Every country has done the same thing in the past. They get to a certain threshold, and then it's just foot to the floor to print and create the money into nothing. And therefore, when they do collapse the value of the currency, it makes the debt go away. This is what happened in the Weimar Republic for Germany. The Germans realized they could never pay back all the debt, so they fired up the printing presses, and it took 5 years to print the Reichsmarks into value of nothing, which then meant all the debt they owed was worth nothing. And every government has followed the same example before and after. It's no different. The Canadian government is doing the exact same thing. That's why there's every study possible. It's hundreds of millions of dollars thrown at it, and they don't care. And in the last 3 years, we've grown the debt by $2 trillion in Canada. And I say, what business does a population of 40 million people having a debt grow by $2 trillion? That's obscene. So our total debt now in Canada is 10.2 trillion as of last January, this past January. And that's measuring all levels of government, corporate debt, and family household debt. And that puts us at a 408% of GDP, which is a failed country. It's bankrupt. And when Ireland failed in 2008, they're at 400%, same measurement. And people went to bed one night and woke up the next day and they lost all the money that was in the bank. And I've got a couple Irish clients that they had friends that were had $75 million in the Irish commercial bank. And they woke up the next day and they didn't have a penny. And they're in their 70s in retirement and lost everything. And then we all are more familiar with Greece in, I think, roughly 2009, where all of a sudden there was capital controls on their banks and Germany bailed them out. And they're at 345% of GDP, same measurement. So we're there. And there's a half dozen nations around the world that their currencies have collapsed and banking systems have gone down. And unfortunately, that's going to come to the West. Only because that's the cycle we're in from everything in history. If people look at history, study it a little bit, the cycle is all the same. Nothing is different. The Roman Empire failed for the same reasons. They printed their money, in this case, debased their gold coins. And 85 years later, they had 120 years of no inflation. And when they started debasing their coins, 85 years later, the country fell. Mexico had 400 years, no inflation. Their economy was based on silver money. You either had the money or you didn't. There was no such thing as debt. And they had 400 years, everything priced the same. And we can't even get through a year without having inflation, because when you take away the gold standard, now what's backing the currency is debt. And debt can be created from nothing. Which is interesting because people don't understand that this all started back, the dollar bill is a derivative by nature. The paper money is a derivative of something to give it value. Otherwise, it has no value other than it's paper. And so it all started with the gold standard. And then, decades later, and people accept the dollar. And then a generation or two later, they just eventually get rid of the gold standard and discover they can just print money until it's coming over their ears. And now we are where we are. So I wanted to throw some of that in there to answer some of those questions, because those are historically what's going on all over the world, in the past and present day. And we're going to be in there somewhere. Like Venezuela, if you want to watch some, to your audience, watch some modern day examples of some documentaries in Venezuela. You'll see the future of Canada. Venezuela, moved over to whatever the right term would be, socialist, communist dictatorship 30 years ago. The government promised to end unemployment, so they employed everybody in the government. What do we see going on in our country? It drove debt to the moon, so that Venezuela imports its oil. It's cheaper for them to do that than to refine it themselves now. They take over every single business there is, and it's government run, because we all know governments can do a good job at running businesses. and it drove the dollar to nothing in their country. So what do we got going on in Canada? The last couple of years, it's been stated by maybe a government official that the Canadian government has been expanding at the fastest pace in Canadian history. And the private industry sector, which is the economy, the government is not the economy. The private sector has been contracting at the fastest pace in Canadian history. And what do we have? We have a government that wants to be more like a dictator, and they're making bad decisions, and they're driving the debt through the ceiling. We're doing all the same stuff that Venezuela's done. So even if we're only 10% as bad as Venezuela, that's going to be an utter disaster. So I hope I covered off the questions within all that.
Yeah, no, you absolutely did. I do want to hone in on silver here for just a moment. Obviously, I think we're seeing above $31 trading today, at least the last time I checked the price. However, if we look, that's in nominal terms. If we look in real terms, it's not actually anything special. It seems like this $30 mark, all these silver bugs are online cheering on that silver broke $30. Well, that's not really $30 to your example of how fiat currency has been debased over the years. However, silver also has this aspect where it's being looked at in many ways as an industrial commodity and not as money anymore. I've spoken to several guests on this show who have said flat out silver is no longer a monetary metal. It is 100% industrial. It's more of a speculation, whereas gold is money. Silver is something you can look at more as like copper or other base metals that are used in industry. I'm guessing you have a different view and you still see silver as a monetary metal. Correct me if I'm wrong there. Walk us through how you see the silver market shaping up as we move forward here.
Yeah, sure. I'm familiar with that gentleman's point of view. I know who you're speaking of. I've heard him say that a couple times, and I've listened to it his talk about that a couple times and I find it very interesting. I don't agree with it, and that's fine. I mean, he's allowed to have his opinion and myself, but I'll explain why I don't agree, and I think this will be helpful to people. Is that if you go back 150 years, half the world was on a silver standard and the other half on a gold standard. So silver was a monetary metal way back when. And there was a war between two banks, let's say the German banks and the English banks or whoever was involved. And, the German banks won out and bought the European banks. And from there it was, the spotlight was put on gold and then poo-poo on the silver. And that's been sort of like the trend for the last 140, 50 years. Mexico, their entire heritage is nothing but silver as money. That's their economy was all silver trading, coins. So there's as much history as silver being used as money as gold, in my humble opinion. Maybe not. I mean, I don't know if it's 50-50, 60-40, whatever the split is, but there's an awful lot of history on it. Secondly, if you use some examples today, I'll use Venezuela. It's one that I followed very closely for a while. Argentina's got a very similar story. When the currencies collapse, when we're talking about hyperinflation, and that means hyperinflating the dollar, so it also goes hyperinflating downward at the same pace. How do you go use gold to buy anything? Because here's historical data. 6 years ago, 2018, January, it was $684 in the Venezuela Bolivar, which is their dollar, for 1 ounce of silver. So at that time, it's roughly Canadian $20. Okay. And that would buy a month's worth of food, 1 ounce of silver or $684. 6 months later, July 2018, 90,000 sovereign bolivar for the same ounce of silver, and that's what it costs to feed yourself for a month, either or. 2 years later, July 2020, $5.9 million Sovereign Boulevard or an ounce of silver, and that's what it costs to feed yourself for a month. Quicken it to today, it crossed the $1 billion mark for an ounce of silver, and that's what it costs to feed yourself for a month, you and your family, okay? Now, there's plenty of examples out there on YouTube to find, but people, have gone into these stores and there's plenty of food around. And if you have like a 100-ounce bar of silver or a gold coin, that represents 8 years of groceries. And nobody can make change. So, if that other guest, parachutes into Venezuela with me, and I've got a backpack full of silver coinage on my side, and he's got one gold coin, how's he going to use his money, and how am I going to use mine? I'm not going to have a problem. He's going to want to ask me to change it, and my reply would be, what am I going to do with it? I can't use it any more than you do. You can. Okay? Nothing against you. It's just that I have so you're going to have people that have these big denominations, like a 100-ounce bar or a gold coin, which represents multiple years, that are looking for change. And the storekeeper doesn't have the change. So if they came to me and said, can you change out this 100-ounce bar? I'm like, well, I really don't want to. I can't use it any more than you can. So why would I want to do that? So if I had enough silver coinage so that I would actually entertain it, it would be at a dramatic exchange rate on my favor.
Well, Andrew, this has been a fantastic conversation. A ton of insight shared into the precious metals market. So very much appreciate that. For those who do want to learn more about what it is you do at Sprott Money, what can you tell us about that? Where can people find you?
So they can go to our website, Sprott Money, SPROTT money.ca is the Canadian website. .com would be the US website. I have an email that's deathofthedollar at sprottmoney.com. So deathofthedollar at sprottmoney.com. People are free to send me an email. You can go on the website and call the toll-free number, which is, I think, active pretty much anywhere in the world. And they can call that toll-free number. My extension is 230, and I'm happy to share any information they want to ask about. It doesn't cost them anything to speak to me, nothing like that. So it's like, I just want to make sure that the message is out there for as many people as that can be heard. And if they buy from us, fantastic, great, happy to help them. If they don't, well, that's that's their choice. So, but anyway, we're all non-commissioned, so it's like all of my information is objective because there's no numeration involved with any advice I give. So, what better advice can you trust?
Yeah, absolutely. That's great. I'll put a link in the description below to the Sprott Money website, as well as the email address. I love that, Death of the Dollar. Thank you so much, Andrew, once again, for coming on the show and sharing your knowledge with the audience.
It's my pleasure. Thank you so much for having me.
And thank you for joining us today. This episode was brought to you by ARC Silver Gold Osmium. For all your precious metals needs, head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.